Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, my friend Bimnet, welcome to Galaxy Brains.
Thanks for having me.
Yeah, what an exciting week it's been so far. It feels like ETF speculation and consideration is really picking up after that headline that turned out to be inaccurate was published on Monday morning. What did you see on Monday?
We saw a tremendous amount of short covering in spot and in options form. We saw renewed sort of interest, renewed attention to the Bitcoin ETF, and the timeline around that. And since then we've seen healthy follow through in the price action of Bitcoin so far. You've turned the 200-day moving average, which was resistance, into support now. And generally speaking, Bitcoin has been trading much better than the rest of the crypto complex. So it's led to a Bitcoin relative outperformance, and just an outright, sort of continuation of the uptrend that you've had since, hitting a low of 25K. And so, broadly speaking, I think folks that were short any convexity panicked, and they quickly covered that convexity via spot and via options, and it really kind of showed how underpositioned the market was for an actual ETF announcement. And so, I think broadly speaking, these developments were constructive. The price action that you've seen after has been healthy. And it's now going to, be at the forefront of people's minds that, we might have an ETF that gets approved before year end or in and around year end. And so you don't want to be caught with your pants down, in an asset that can literally moon.
Yeah, exactly. It was an exciting and obviously strange thing that happened. Just for our listeners, if you didn't see, although I'm sure almost everyone did, Cointelegraph had apparently erroneously, certainly erroneously, we know now, but didn't right away, posted that BlackRock's Bitcoin ETF spot application had been approved by the SEC. That was false. It has not. None have been approved. I think prudent for market observers to rely on official communications from the SEC and others, maybe issuers or something, to find out when that happens. But what are we watching? I know you and I have been following the amended S1 filings. We've seen Fidelity, Invesco Galaxy, and ARK have all refiled their S1 applications with amendments, and those, I would say, the updates have been relatively benign, right? Sort of
Yep.
expanding disclosure sections and stuff. What are we watching for? Obviously, we're watching for others to refile, but what does that tell you? The sort of character of those amendments, like when you think
Yeah,
about what it
I
might.
think you're totally spot on. The character of those amendments is completely benign, right? They're not like huge fundamental changes to the filing. It's more like there's some risks around this stuff, and it's like the proper disclosures, and so I think what we're getting at and what we're looking for is just language that's becoming more consistent amongst the filers as this process develops. And the closer you are to just consistent language across all of the filers, the closer you're going to be to actually getting an ETF approval. And then most importantly, I'm watching the Jan 10 date for the ARC ETF, which I don't think that there's a right now a feasible path for the SEC denying that filing. And so I'm kind of viewing that as kind of the last kind of stick in the sand, or whatever
Yeah.
proverb you want to use. And so that's kind of what I'm watching for. In addition, it's just the one thing folks need to keep in mind is that the last time Bitcoin traded at new all-time highs, it was around hype for an ETF, because folks did believe that an ETF product would make this asset class really go off to the next level. And I've said this before, the two things you have to keep in mind with the ETF is that the US capital market is the largest and best capital market on the planet. And an ETF has proven to be one of the best financial innovations ever in history for wealth creation. You are combining those two things with a Bitcoin ETF product. And as the price action recently took, suggested, like it's going to be unequivocally bullish. And the amount of supply that's available in the market in terms of just liquidity, for buyers versus the liquidity that's going to be brought on by an ETF, I think there's a complete mismatch. And so, I think as time goes on, the market will continue to price in that delta, or that probability of an ETF approval much, much, much higher. And therefore, I do think you're going to be in one of those situations where not necessarily buy the rumor, sell the news, but you are going to have a rally in crypto prices going into the ETF. Now, are there some potential negative catalysts between now and then? Government selling, potential finance action? Yes. But I do think those are going to be dips that get bought. And ultimately, I don't see a world where, you're in mid-November and we haven't gotten, we have a bunch of new S1 filings and it's getting closer, and you're not, kind of approaching, trend highs for the year. So I'm constructive on Bitcoin, just specifically because of this catalyst, but also because of, kind of the macro backdrop as
Yeah.
well.
Let's talk about that real quick because in sort of response to the fake news from Monday, BlackRock CEO Larry Fink characterized on Fox Business crypto, which he later said he's not allowed to say Bitcoin because of their filing. I don't know what advice he's getting, but that crypto, he said, could be part of a flight to safety along with things like
Absolutely.
gold and the dollar, given the macro geopolitical and macro environment. Like, let's think about that and how that fits in your mind.
So, I mean, this is a brutal take, but let's just say that, Bitcoin's magic internet money, or just some random asset, right? And it's not, something that has a long history, but it's just a random asset that the BlackRock CEO is talking about, right? If he characterizes it as, something that's going to be a flight to quality, and he's one of the more influential macro folks on the planet, because he runs a $10 trillion asset management firm, like I'm going to be interested in buying that
Yeah.
for the reasons he specifically said, whether it's in crypto, in bonds, etc. Particularly in just allocating towards assets or narratives. And so when he puts a narrative that this is now a flight to quality asset, a gold asset, right, a safe
Mm-hmm.
haven asset, I am going to take him at his word, because that is kind of the messaging that the world's largest asset managers is going to go out with. And so I think it's incredibly bullish in the sense that it will help shape the narrative and the conversation around Bitcoin in a way that's much more direct, as in he's the guy that goes into investment committees, that can go turn a board that's one or two people away from investing in an asset. He can go to these sovereign wealth funds and be like, why haven't you allocated yet? And so, and if he can do that and the price is appreciating, folks are literally going to look like, not idiots, but they're going to look unprepared and or just not having done the proper
Yeah.
work,
If they
because
don't consider it.
if you don't consider it, at the very least, you're not doing your fiduciary duty. Maybe that's a little bit strong, but fundamentally, right? Technically speaking, if you just think about Bitcoin as a series of price returns, right? We know that over time in a portfolio with a small allocation, it has added to performance. It has delivered outsized market returns. In addition, it has diversified your returns, aka it's improved the risk and the reward profile of your investment portfolio. And so for somebody that's just looking at their portfolio in the context of portfolio construction, like you have to seriously
Yeah.
consider this, because it helps your returns and it reduces your risk.
Yeah.
How on earth are you not thinking about that, especially when the CEO of the world's largest asset manager is giving you a product and
Yeah.
telling you that this is the narrative around it?
Yeah, we just put out a report about 2 weeks ago called Bitcoin in a Portfolio that goes into some of that historical impact on portfolios that Bitcoin has had. Let's shift gears briefly, BIMNet, and talk about the broader macro environment.
Absolutely.
I saw that 2-year yields were making new highs, trend highs, earlier this week. So
Today.
the debt, yeah, today. So people still don't. They're still selling those bonds. What does that tell you?
Well, it tells you that the data has been hotter than most market participants had expected. And so what you've recently had is a string of really hot, hard data. Going back to a couple weeks ago, you had, over 300,000 jobs printed in non-farm payrolls, so strong labor market. CPI was really strong. It surprised higher, 0.4 month on month. And the components that you cared about most also came in the hottest: owner's equivalent rent and supercore, which, is a gauge of services inflation, all surprised higher. And then you had retail sales, which, is a good indicator of the U.S. consumer. Consumption is like 70% of the U.S. economy, also surprised higher, meaningfully so. You're talking about like a 0.7 month on month increase in retail sales, and August numbers were revised higher. So the critical parts of the economy and the critical like points of hard data that the market looks at have all surprised higher, and therefore you have seen a repricing of interest rates to go along with that. And you're now seeing, like as we speak, 30s are sitting at over 5% now. 2-year yields are at 5.25. 10s look like they want to go to 5%. And this is in a world where we have a potential political conflict that involves billions of people potentially.
Right.
So I think it's quite telling. In addition, none of the supply stuff has slowed, improved. Like Biden's trying to do another $100 billion aid package. What does that mean? That's debt that has to get financed. That's more interest payments, et cetera. That just puts things out of whack. And so there's nothing really tackling the supply issue in the market. And the Fed, even though they've recently tried to talk down expectations of a hike, again in the front end, they can't ignore hard data like this. I understand that monetary policy works with a lag and we're seeing cracks, but when the main thing you're targeting is not going your way and is still surprising higher, you kind of have to question, am I right in my policy? And so that's kind of, the juncture we find ourselves in, which is a lot of hot data and a Fed that doesn't necessarily want to move the front end for it, and a market that is taking that as a sign that it can sell the back end, particularly in the context of supply.
Yeah, tricky.
And dollars have gone, are now super bid as a function of U.S. rates, backing up again.
Wild. Well, it continues to be a tricky and interesting market. My friend Bimet Abibi from Galaxy Trading, thank you so much.